Hi, everyone. Glad you could be with us today. I'm delighted to have Maggie Griffin with us once again. And Maggie, you may recall, is with Somercor here in Chicago and a premier uh, member of the lending community. And she'll explain the interplay between banks and Somercor and real estate loans and so forth and all of the definition. But I think it's really important to take the temperature of where we are today in the economy with all the things that have changed and all the things that could change. I introduce and welcome Maggie. Glad that you could be with me today.
Hi, Paul. It's glad to be back again. I appreciate the invite. And you're right, we have a very interesting economy right now. We have our chairman, Federal Powell, who continues to take up the prime rate with concerns of inflation. We do have concerns from our small business owners, boots on the ground, that we've got a huge recession coming. We have got concerns with consumer debt, especially since the student loans are not going to have any type of forgiveness. And now that clock's starting to tick again, and you've got people having to pay student loans again that have been on hold forever. You've got credit unions that are giving car loan payments up to 96 months versus the traditional standard of 60 months. We're seeing a lot of things. Our office space is not being utilized. We're seeing people turn keys back to the landlords and saying, we're not renewing. You see the city of Chicago where there's a lot of vacancies. I've seen businesses that I have financed down there that are no longer there. You don't have the hordes of people in the city of Chicago anymore. They're not on the Metro trains or the L's. You're seeing people drive in versus the trains. It's not that Metro's not safe, because it is. It's the walking to and from. There's some issues. But more importantly, Paul, we have what I would call, and I heard this expression the other day, an uneducated economy. What I mean by that is you have younger generations that had only seen 2 and 3% or even 4% interest rates, and they don't understand why the interest rates are now 5, 6, 7%, but prime at 8 plus. They don't understand that what they saw at the 2 and 3% was not the norm. Okay, in our careers, I think of my older siblings whose very first mortgages were at 19%, 20%, 21% floating. Okay, my very first home was at 9.75, and I was complaining, and I had a sibling say, take it and run with it. Okay, so when I say that uneducated economy, we have people who have never lived through the real numbers, the real times, because we had those 2 and 3%, which were utterly, if I don't want to say inflated, but deflated, there's the word I'm looking for, during that time frame, and part of that was driven by the pandemic. So a good portion of it by the pandemic. So we have to educate our small business owners, these next generations, where maybe grandpa sold to grandson, or dad sold to son, or dad sold to daughter, and said, hey, you got to take this over. Where normally a small business owner business model was 5 or 6% they would pay in financing fees, and then they had a 5 or 6% that was profitability, right? There's your 10 to 12%. Well, if you're getting access to capital at 11.25 or 11.5%, guess what? You have no profitability in your company. So then what are you doing? You're letting people go. You're cutting back. You're not expanding. You're moving across the borders out of Illinois if the real estate taxes are too much, or your workman comp insurance is too much. So that's why I'm saying we need to educate this generation that is now taking over from the baby boomers. And face it, we have so many baby boomers who are now selling businesses or retiring and passing on to multiple new generations. And we do also have a lot moving out of our state.
Maggie, what are some of the components, given all of what you said and all of the alertness necessary going forward? Where do you come in and begin educating the people? Is it when they apply for something and you analyze their financial position or their financial statements on the business and dramatically tell them, yes, you're approved, or no, that you're? What's your role at Somercor to do this education for the next generation?
That's really good. I work in tandem with the bankers. So as a certified development company here for the state of Illinois, we work in tandem with banks on the S.B.A. 504 programs. So the 504 program is a fixed rate S.B.A. program that allows you to purchase commercial real estate, refinance commercial real estate, do renovations, improvements, ground-up construction, or large pieces of equipment. It needs to be owner-occupied at least 51% per PIN, property identification number. So when I'm talking with a small business owner, let's say the small business owner contacted me, they're in a business, and I know a couple of bankers who do that industry very well for financing, I will make sure the three of us get on the phone and have a call. What are you looking for besides maybe purchasing that building or doing renovations to that building? Or you're looking to do ground up construction, you're renting a place right now or leasing it, and now you want to have your own, right? We look at the balance sheet with the bank, and the bank will also say, wait a minute, we think we can do some other things. So what's nice about all the S.B.A. programs is you can layer them on top of each other, Paul. So if I'm doing an S.B.A. 504 program to purchase commercial real estate and do renovations, yet I know the small business owner may need permanent working capital or additional inventory, we can layer on the S.B.A. Express loan. Okay, this is a loan that can go up to $500,000. It's a straight term loan for up to 10 years. It's got a 50% government guarantee. It can be credit scored by the bank if that's what they want to do, which is kind of nice. And what you're doing is you're flushing that small business owner with permanent working capital, right? In addition to allowing them to expand into that building or do renovations on their existing locations or buy large pieces of equipment on fixed rates. Now, the S.B.A. Express, depending upon the bank, it may have a variable rate or it may have a fixed rate. So if you're looking for the fixed rates, you've got a couple of really big players here in our market who do the 7A and the Express loan fixed.
Yes.
You have Chase, you have Live Oak, you have U.S. Bank, you have Wells Fargo, and I'm missing one, Wintrust.
Yeah.
Wintrust, thank you. I knew I was missing one. So what was nice is when you work with those bankers and you can layer on those S.B.A. programs, it actually helps the small business owner navigate and learn their balance sheet. What do the banks look at on those balance sheets? What are they looking for to help you grow? And you know what? That's so very important to our small business owners. Can you take on that loan? Or do you have loans already on your books that you need to refinance out and get into something else? Do you know what I'm saying? I am doing right now a lot of 7A variable rate loans, and I'm converting them to the S.B.A. 504 fixed rate program. Now, it's based on the original use of proceeds, and there's a formula we have to go through and everything, Paul, and I don't want to go down that rabbit hole with you, but it's important that people understand, even if you have an S.B.A. loan right now, that's 7A and it's variable, let us take a look at it. Let's see if we can refinance that to the S.B.A. 504 and fix it. Or let's work with your banker to see what other options you have.
So what you're saying, in the broad sense, is that whomever may have an inclination, who may have a desire to reach out and expand or be financially reasonably managed and in control, can contact you for this assessment and interest, whether they qualify or how best they can reposition themselves in a lending environment. Is that pretty accurate?
Yes, it is.
Good. Okay. That's the business owner over here is a group, and then there's the business soon to be owner, and then let's start up a business.
Yes.
Let's go to the express loan for just a second.
Sure.
The business is operating, and it seems as though that if they do certain things based on market awareness and certain inclinations as to market reporting and the feedback from consumers, they can grow. Is this a business in operation express loan, or is it only for startups, or is it only for mature businesses that really only want to reposition their indebtedness structures?
No, Paul, so what's really nice about the S.B.A. program, it's for all of those categories. If you're a startup business, the SBA programs really help you, because you're looking at anywhere from a 10% equity downstroke to a 30% maximum that the SBA programs would want you to put into the table. So that's really nice. And then you get those longer terms. So let's say you want to do a permanent working capital. You need that to help start your business up, okay? Now you're looking at 10 years of stretching those payments over it, okay? That's a big help, okay? If you're in business and you need some help cleaning up your balance sheet, or you're looking to do a little bit of an expansion, the SBA programs are for you there as well. And if you're a mature business and you're looking to, buy your competitor, or you're looking to expand to your second or third or fourth location, the SBA programs are there to help you as well. But we work in tandem with the banks. The banks really do want to help the small business owners. Do we see some tightening right now in credit from some of the banks? Yes. But there are still banks out there and bankers who want to lend and will lend under the SBA programs.
So the operative decision here on the part of the business owner is don't hesitate. Don't necessarily become prepared or all put together in one area. If you don't know, contact you.
Correct.
And you'll help tell them. You will be an advisor.
Very much so. We are here as a valued partner.
I don't think that's understood enough on the part of the people whom we work with on a daily basis for the last 45 years. They don't understand they need to be packaged and ready to fly. But you'll be helping them create the package, as I understand it. And that's incredibly important. I can think of people whom I'm working with right now that would like to buy a corporation and have the necessary personal financial statement of net worth to be adequate to comfortably go in and talk, but they've already made the decision in their mind that this is how it's going to be. I don't think so. That's my sense. So what I try to do is have people contact you. If they are working with a bank, to have the bank contact you.
Sure.
For this analysis. That's a pretty reasonable course of action, isn't it?
Yeah, so it's really important, especially if you're going to be a startup business, you need a business plan, Paul. And you know what? There's so many templates out there right now. Google one, okay? But, and I do a presentation twice a year for the SBA on what a banker's perspective of a business plan is and what needs to go into that. And I'd be glad to help articulate that to anybody who needs that if they want to start up a business. But if you're going to buy a business, you still need a modified business plan. What are you going to do when you buy this? Who are you going to retain? Who are the key employees? What changes may you make? Who are the new vendors? Are you keeping the vendors? Are terms going to change with your suppliers? I mean, those are the kinds of questions you need to ask. And you know what? That's something you've got to get the buyers to think about. And also, if you're buying it, why don't you ask the seller to stick around if they can for 6, 8 months, help transition, help you navigate through.
Yes, that's usually the case. It's seldom that the transition period, although it does happen, 60 days would be probably the minimum in terms of turning receivables over and all of the working capital withholding machinations that you go through for transition. Usually 6 months is not an unreasonable length of time to stay with the business until the new owner meets all the customers, clients, and gets behind the wheel and knows where all the buttons and levers are at, and then can transition out. We try to encourage a 6-month period, not always successful, but frequently do that. And I think it's smart.
I would agree.
Now, to jump over into something that fascinated me when I looked at your website this past week, and that is grants.
Oh, yes.
Here we are in this cloudy environment with things possibly going to happen. And now you have the unbelievably underserved folks who want to be in business or continue to run their business. What's a grant? Tell me about the grants.
So Somercor, on behalf of the city of Chicago, we administer the grant programs, the Neighborhood Opportunity Fund and the Small Business Improvement Funds. And these are usually lotteries where you go into, based upon the geographical map of the city, certain areas open up, TIF areas will open up for the grant programs. And we're so fortunate. We have a wonderful grant director that works for us. She's been with us for 17 years, Sylvia Orozco.
Wow.
She is just outstanding, and she's done more for more small businesses owners in the Chicago market than anyone I've ever known. And she's just brilliant, just a brilliant, wonderful woman to work with. So we will go out onto our website and we will let people know when certain areas are open, or you can call in to Sylvia's team or to Ruben, who does the Neighborhood Opportunity Funds, and say, okay, this is my address and zip code in the city of Chicago. Is this area open or available right now for grant funds?
Mhm.
And how do I apply? And they will walk you through the application process. They will get everything that you need to be put together, and then they will get everything submitted into the city of Chicago, and then the lottery takes place. And then once the lottery is done and the grants are distributed, we are still here as your value-added partner to help you get through this.
Good, good. Are there any particular types of businesses that would be looked at more closely than others in terms of a grant?
So then the grant program, you have to be a for-profit business.
Yes.
Just like the S.B.A, you have to be a for-profit business. But other than that, and then most of those grant programs apply to commercial real estate, like Small Business Improvement Fund is for, the building, renovations, things of that sort. So the grant programs are really very nice. But again, Sylvia has a wealth of knowledge. She'd be more than willing to work with anybody or talk to anybody about the programs. And she's just a genuinely good person with a good heart.
Run down for me, if you will, the term period and currently where the interest rate range is in terms of a 504 real estate based loan or the 7 series for the larger equipment. Where are you now as far as the interest rates are concerned?
So I'm going to tell you in here, I'm going to get my little sheet up here for you. 1 second. I will tell you right now. So if you're purchasing equipment, you're purchasing a building, if the equipment appraisal can get you to a 25-year term or a 20-year term, and the building we can do over 20 years or 25, a 20-year debenture is at 6.3%, a 25-year is at 6.58% right now, okay?
That's
So
a heck of a lot less than what we're talking about in other lending penalty rates. Good grief, that's a lot less, isn't it?
yeah, that's 6%, 6.5%. Between 6 and 7 is always a good rate. That's my thumb in the air, right? So I can tell you right now in the 7A programs, which is basically prime plus 300 per the S.B.A's SOP. So prime right now is 8.25 or 8.5 plus 300. You're looking at 11.25, 11.5%.
Mm-hmm.
That's expensive money for a small business owner.
Yes,
However, with some of the people who do the fixed 7A rates, they're more down in the 8 and 9% versus that 11%. So that's something that they can help you with.
it's a good idea, and I think you'll agree with me. When the customer comes to you with the value of the equipment or the real estate, it's always a good idea to have a certified appraisal.
Correct.
Not what Uncle Harry thought it's worth or anything that you read in a newspaper article, but a certified appraisal with credentialed appraisers so that you can clearly indicate what the current market value is. That's correct, right?
That is correct. And most banks want to do the appraisals themselves. They need a third-party arm's length vendor who can do the appraisal, and we also want an appraiser who knows what the S.B.A rules are on equipment and on buildings. Okay, that's really important. And then usually, if it's a business acquisition, you need a business valuation appraisal.
Right.
because they want to know what the business is worth. And there's usually 3 methods that they always want to have on that.
Exactly. And some to choose from, and you'll help them with that. You'll help them with referrals to go to and get prices and get the mechanism of getting the appraisals done. Is that true?
Yeah, so we'll work with the bank on the business valuation. We'll tell them that, look, the business valuation's got to be done, an appraisal's got to be done, an environmental report has to be done.
Yes.
Okay, because you've got to make sure that that property is clean. Most commercial real estate properties, we do need a phase 1. Okay, and sometimes, depending upon where the property is located, you may know right away that you might have to go to a phase 2, a limited phase 2. But usually, if the seller is working with you to buy the location, they'll have had environmental reports before on the property that they will share.
Yes.
So that always helps when you have to have a new one. So in the S.B.A. world, we cannot take an appraisal that's over 12 months old or an environmental report over 12 months.
To view you as a resource, I'm addressing now to the people who are watching, and we post the podcast all over the place, and a whole bunch of folks look at them. But if you're going to be buying a business, for example, or you're going to be considering the resources of the S.B.A. with 504 or whatever category loan, be prepared, but don't try to package it yourself. Go in and see Maggie and her staff so that they can assist, evaluate, suggest, and guide directions that you may not have thought about, that you would be well served to listen to what they're saying so that your success has a greater probability of occurring. Most people, when they talk about bankers or loans or documents or legalities, begin to have their palms sweat, and they don't quite know how to handle it because they're not accustomed to it. They run a good business, but dealing with a bank may be a new experience. But in these days, with all the circumstances that we've spoken about today, the banker, the resource, can guide you into more sensible, more plausible, and doable paths than you perhaps have taken in the past. Did you want to add anything to that, Maggie?
I would just tell all small business owners, you have some valued partners, your CPA, your attorney, your banker. If you haven't built a relationship with that banker, build one, because that's so very important in this current economy and market right now. Talk, put everything on the table, have that conversation. Those are the 3 most important people to your management team, besides your boots on the ground people at the company.
How can our viewers get in touch with Somercor and you in particular?
Okay, so if you're looking for Somercor, it's www.somercor.com. The best way to always reach me is a cell phone because it's on 24/7, 708-804-8208.
Terrific. I want to thank Maggie Griffin for being here today. I urge you, the viewer, to take advantage of new knowledge specifically designed around your possible success. Maggie, thank you. Thank you for listening, and we'll talk with you all next time. Bye for now.